Hey crypto friends, for those of you who are new to the channel, my name is Garrett and welcome to Altcoin Radar. Now, since I am a huge fan of trading education, I figured it would be a very good idea to show you guys just how easy it can be to day trade the 15-minute charts with just about any basic trading indicator. Now, for those of you who love trading crypto and would like to try out the same crypto exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here with the link in the video description down below this video. I personally love this exchange because they allow anybody from anywhere to be able to sign up and trade crypto futures. So if you're from the United States like I am and you want to trade crypto futures, you can do it right here on the Blowfin exchange. All right, guys, so let's go over to the charts and let's start talking about how you can trade with super basic indicators anytime you want on the 15-minute charts. So the first thing that I want to that I want to talk about here really quick before we actually dive super deep into this video is you cannot make your entry and exit decisions solely based on indicators. That would be an extremely bad idea. All right. There is nobody in the world who makes a living trading the market using just indicators and making their decisions solely on indicators alone. Okay, so what I'm talking about here is you can't just look at the RSI and be like, oh, it's oversold, so that means, hey, I'm gonna go and open a long position, and I'm definitely gonna make money there. All right, it's not just about oversold and overbought levels. Okay, there's a lot more to it than just that. All right, because a lot of times these are lagging indicators. So these lagging indicators, they can give false signals on a very regular basis. Okay, so the other thing I want to talk about here real quick is you want to be using, in addition to these indicators, you want to also be using basic charting patterns, such as, regular charting patterns or candlestick patterns, anything like that to go along with your overall bias as far as which direction you think the price is going to go, which is going to ultimately determine on if you're going to go long or if you're going to go short, etc. Okay, so the four basic indicators that I'm going to be showing you guys here today, as far as how you can make decisions with trading them on the 15-minute chart, is going to be just the basic RSI indicator, the basic MACD indicator, the basic Bollinger Bands indicator, and the basic EMAs indicator. All right, and by EMAs, I'm talking about the 20-period EMA, the 50-period EMA, the 100-period EMA, and the 200-period EMA as well. All right. So the first thing that I'm going to go through here and talk about real quick is going to be the very first thing that I personally do before I do anything whatsoever. Is the very first thing I do is I mark out the previous days. I mark out both the previous days high and low, and I also mark out the current day's current high and low as well. So as you guys can clearly see, this line back here goes to yesterday's low, and this line up here goes to yesterday's high. And this line down here goes to today's current low and today's current high as well. All right. So, and we use these guides as kind of like support and resistance levels as well, and they work out very well. So what I'm talking about here is you can't just look at these indicators and just be like, okay, it's oversold, so that means I'm going to get in because it's going to go up and it's going to start to reverse. You want to be looking at other things too. You want to be looking at these levels that we just pointed out. You want to be looking at the candlesticks themselves and seeing what kinds of candlesticks are forming, all this kind of stuff, okay? So as far as trading the RSI here, what I'm going to look at here is I'm going to use this current example right here of it dumping right now, okay? And I will also use this example of this dumping back here as well, all right? So the first thing I want to talk about here is right back here, for instance, okay? How you would have ended up trading this is you can clearly see that we ended up coming down pretty far, all right? We ended up coming down pretty darn far, and as you guys can clearly see on the RSI, it went down pretty far as well. And usually 9 times out of 10, when the RSI is below the moving average on the RSI, which is this white line right here. So when the RSI, the green line, is below the moving average, it typically means that the market is bearish and sellers have gained the momentum and bears have taken control for the current little bit of a trend that we're currently in. And that's what you can see here is sellers ended up taking control. We ended up crossing over into bearish territory on this moving average right here on the RSI, and we started going even further and further down, okay? And again, the same thing ended up happening right here. But the interesting thing that did happen right here is, in addition to the RSI only going up to the 50, kind of the neutral range, it also ended up forming let me go ahead and make that a different color. It also ended up forming an inverted hammer candle right here, okay? So we've got an inverted hammer candle right here. They kind of look like shooting star candles as well. But these types of candles, these are bearish candlestick patterns. So that tells you right there that we are probably going to end up dropping from there, okay? Now, in addition to that, another thing happened at this level as well. As you guys can clearly see, if we were to move this line over even further, we can clearly see that we went up to basically retest this area of resistance that we ended up creating right back in here, where we ended up consolidating for like an hour or so, and we were not able to go up past it. So therefore that tells us once again right there that, okay, well, since we didn't end up crossing above it and sellers ended up taking control, we're probably going to end up coming down. Which is exactly what ended up happening, as you can clearly see. And you can see that in the overall RSI indicator as well, all right? Once we ended up coming down, we did end up coming down after the bearish candle that we've got right here. We ended up coming down, and it started to come down even further, and we ended up coming down and closing below the moving average here on the RSI, and we closed within between the 30 and 50 level within the RSI as well, which also means that obviously things are still bearish, okay? Now, again, as you guys can clearly see on the RSI, we did end up going back upwards, but as you can clearly see, we were not able to break that 50 period, or that 50 level, which is the neutral level. So that tells us right there, momentum is still weak, sellers are still in control, and again, it ended up coming down once again even further, and then it really started to drop. So it's not a matter of just looking at the RSI and just being like, yep, it's oversold, or yep, it's overbought, and entering a position, okay? You got to look at pretty much everything. You got to look at candlestick patterns. You got to look at, where these candles are closing in relation to previous candles that closed. You need to look at all of these different aspects in order to be able to get a good idea of what's going to happen next, okay? So as you can clearly see right now, I'm going to use this current price action right now as another good example, okay? We had this big run up, okay? We had this big run up. We went all the way up to this resistance area, or close to it anyway, but we were not able to get past it. We weren't able to get past it, and instead the next candle opened and we ended up dropping instead. So that means, buying momentum or bull momentum ended up getting weak, and bears ended up taking over, and they dropped the price. And as you can see it clear as day right here on the RSI as well. Once we ended up breaking down with this big candle right here, the RSI ended up dropping below the moving average, and it went all the way down to the neutral line here at the 50 level. Now, this 50 level is another interesting area as well, okay? So this 50 area, we can clearly tell that the 50 area is like the neutral area, okay? I mean, it's the neutral area. So what we can tell by what's happening here is we only went down to the 50 area, the neutral area, and then we're starting to go up now. We're starting to go up now in this 15-minute candle right here. That tells us that bears that were selling, there weren't enough bears to continue the sell-off to go even further all the way down. So what happened was bulls ended up taking back over, and they are starting to buy more right now, and we are starting to go back upwards. And what you'd be looking for here now is you would be looking for this candle to go up high enough to be able to, break, or to go up to the moving average here on the RSI once again. And if it doesn't, or if the next candle doesn't end up going up to that level and breaking past it, then things are still bearish, okay? So if it goes up to the moving average again, but it doesn't end up going past it, and instead it only touches it, and then the next candle opens and starts going down again, that just means we retested that moving average on the RSI right there. We did not have enough momentum to break it. Therefore, it is not a good sign to be able to, continue to move higher and expect higher prices, okay? So I hope that makes sense. That's how I typically do things with the RSI. Now, if we go ahead and take off the RSI, we will go ahead and move on to the MACD. Yeah, we'll do the MACD now. So we'll do the MACD, moving average convergence divergence, and we'll check that out. Now, the same concept kind of applies with the MACD as well, as far as in relation to when we were using the moving average as well, okay? A lot of the MACD is basically momentum, okay? It literally just shows us the momentum that's currently happening, but all of the concepts that I was telling you about with the support and resistance lines from the previous day's high and low and the candlestick patterns and all that good stuff, all of that stuff is still valid with all of these indicators that I'm going to be talking about here, okay? The point of me talking about all of these different indicators is just to show you guys that anybody can trade these 15-minute charts with just about any basic indicator and make money doing it, okay? A lot of the times people put too much focus on what's happening on the indicators themselves to where they end up getting confused and they end up, they end up realizing that, they don't know if they should go long or short, and they kind of can't tell what's going to happen because all they do is just focus so much on what's happening on the indicators rather than what's happening on the price action itself. And where you really want to be paying attention the most is what's happening here on the charts, okay? You don't want to be paying all of your attention to just the indicators and that's it. So as far as how the MACD works here, or how we're going to use the MACD here, is I'm gonna go back and I'm gonna go ahead and let's see here. We'll just go ahead and use the current example of what price action is currently doing. So as you guys can clearly see, like I was mentioning with the RSI, momentum started to drop right in this area right here, like we saw on the RSI, and you can also see that here on the MACD as well. Okay, we've got the signal line and we've also got the MACD line here, and both of the lines are above the histogram, which the histogram is these bars right here. And when both of these lines are above the histogram, it means things are still, kind of bullish in the market. But when they start to cross and start to go downwards and the bars switch from green to red, that means, bearish momentum has definitely taken over and we can expect a bearish move going down further, okay? So if this starts to turn red and these lines end up crossing and we start getting bigger and bigger red bars moving forward within the next 15, 30, 45 minutes, we can fully expect that the price of this coin is going to eventually, it might end up going up and retesting, maybe this area or something like that. But if it does end up building momentum to come down, and then it's going to start coming down and it will start to, do this kind of thing and this kind of thing and eventually end up coming down and retesting this big support level right down here once again, okay? So that is pretty much how you would go ahead and use the MACD indicator here as far as telling you, what could be happening within the next 15, 30, 45 minutes to an hour or so to be able to see what's happening, okay? Now, the other thing I like to use with the MACD indicator is I like to be able to, as you can clearly see, this is a good example this is a good example right in here, okay? So as you guys can clearly see, we had this top way up here yesterday, okay? And then we ended up coming down on the next candle. And what's interesting about this is you can clearly see it visually clear as day right here, okay? In the histogram bars, okay? When buying momentum starts to drop and selling volume starts to take over, the bars start to turn a lighter green color, as you can clearly see right here. And as they drop further and further and further and bearish momentum starts to take over, they eventually turn red, as you can see right here, and then the red starts to take over and the MACD and the signal line start to drop with it as well. And that's kind of what I was talking about as far as how the indicators like the MACD indicator can be very, very useful in telling you the overall momentum of which way coins are currently, which direction coins are currently moving in. So you can tell a lot just by looking at the size of the bars in the histogram, the color of the bars in the histogram, how they're grouped together and how the different colors are grouped together, and the overall position of where the MACD and the signal line also currently is, and whether they're crossing or any of that, okay? So pay attention to all of this when you are trying to trade the 15-minute charts. Now, this isn't something that you're going to just pick up right away. I don't expect anybody to just pick this up and be able to just turn this into a profitable trading system right away. This is just me just trying to prove a point here that anybody can trade the 15-minute charts with just about any basic trading indicator and make money doing it, just by coupling these basic indicators with, basic price action, and that's pretty much it. So as far as the MACD goes, that's pretty much does it for the MACD. So we will go ahead now and we will turn on the Bollinger Bands and see what we've got going on here with the Bollinger Bands. So the Bollinger Bands are, oh, that's ugly. I need to change that real quick. That is disgusting. I haven't used Bollinger Bands in a long time. So let me go ahead and change these colors because those colors were kind of screwing with my eyes. All right. So we got the Bollinger Bands going on here. And as you guys can clearly see, the Bollinger Bands gives us a very nice 20-period SMA, right down the center of it, which is very, very nice to use. Personally, I love using the 20-period SMA and the 20-period EMAs as well, simply because they tell a lot as far as overall directional momentum goes. As you guys can clearly see, we've got our current high right up here, we've got our current low right down in here, and we've got our moving average right in the center. Now, 9 times out of 10, when we've got bullish price action going on, the price action is going to be on top of this moving average right here. When things are bearish or things are starting to get bearish, price action will move below the moving average, and the moving average will be on top of the price action, like you can clearly see right in here as well. Okay, so as you guys can clearly see right now, there's a lot of indecision going on in the market right now, or within this 15-minute candle here going on right now in this coin. So I would personally stay out of this, and you would wait for confirmation to see which direction it's going to go. If it's going to continue, if it's going to bounce here and continue to go higher and stay above the moving average, or if it's going to continue to drop and go below the moving average and go for this, or go to retest this level once again down here. Okay. Now again, you can also use this you can also use your candlestick patterns with the Bollinger Bands as well. Okay. So for instance, let's see here. So we've got a good example right in here. Remember this inverted hammer candle right back in here, okay? This inverted hammer candle, we ended up going up. We ended up crossing above this 20-period EMA right here. But as you guys can clearly see, we did not end up, although we did end up closing above it, it was not very far. It's not enough to basically confirm that, yes, we're going to continue to go higher and higher. So you should be weary when you see stuff like that and not enter trades when, we are hugging these 20-period EMA lines right in here, okay? Because as you guys can clearly see, once that ended up closing and we ended up opening up the new candle ended up going down as well. The next candle ended up going way, way down, and then the next candle ended up opening, went green again to try to retest this 20-period EMA again. And as you guys can clearly see, the next 3 candles they stayed white, and that should tell you right there that, okay, bears are not giving up and they want the price even further down. And that's exactly what happened, is we just continued to go down, 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 and down. All right. So something I want to talk about here, I know I'm going kind of fast, but that's because nobody wants to sit through a 45-minute video. One thing I want to get across here real quick is if I'm talking a lot about candlestick patterns. If there's some of you who aren't familiar with my channel that are watching right now and you're not familiar with candlestick patterns, I did create a video specifically on candlestick patterns recently, and you can find it if you go to my playlists on my channel here and go to technical analysis, you will find this video right here, Secret Crypto Trading Patterns Nobody Will Tell You. And the reason why I named it that is because literally no other crypto YouTuber talks about candlestick patterns, and I don't know why, but they're extremely useful, so that's why I made a video about them. All right. So that pretty much does it for Bollinger Bands, except for the other fact that, obviously when we are walking the bands typically means that we are literally walking the bands. Price action stays, it's hugging the top, either the top band or the bottom band. Usually when that happens, it only lasts for a little bit of time on the 15-minute charts before a reversal ends up happening to whatever the opposite direction is. Okay, so keep that in mind as well. All right, so we'll go ahead and turn off the Bollinger Bands now, and we will go to the moving averages. So the moving averages are a little bit different, okay? Moving averages, if you want the moving averages, you want to go to your indicators and type in EMA, and you want to pick this one by Dr. Sweets, okay? As you can clearly see, he's got quite a bit of downloads for 10,777 downloads. With this indicator, you will get the 20-period EMA, the 50-period EMA, and the 100 EMA, and the 200 EMA as well, all right? And once you have that on, they will look like this, or they will be thinner lines actually, but you want to go ahead and turn those on. And what I like to the way that I like to use them is in addition to, again, looking at the support and resistance levels and the candlestick patterns, what I like to typically do is I like to actually go here and I like to turn off my 100 period or my 50 period and my 100 period. And I personally like to just use the 200 period and the 20 period EMAs here, okay? And the reason why is because it creates less noise and there's less stuff on the chart to look at, and it just keeps things kind of simplified here. Now, one thing I want to talk about here with the EMAs is you want to stay out of the market and not take any positions when we are in an indecision mode. And what I mean by indecision mode is you can clearly see both of the EMAs are kind of like hugging each other right in here, okay? And price action is kind of hovering in this area right now. That typically means that, you know, there's indecision in the market. Bulls and bears are kind of fighting back and forth, and nobody really knows what's going to happen next here, okay? But as you guys can clearly see, I'm going to have to use a past example here. But with the 20-period EMA, how this works is it's the same thing as the 20-period EMA or SMA that was in the Bollinger Bands. As you can clearly see, when price is bullish and things start to get bullish, price ends up going above the 20-period moving average right here. And it ends up, you know, once it starts to deviate really far away from the moving average itself, then it starts to come down for a little bit of a correction. And that's why you can see this big correction that happened right here. And once again, once we ended up coming down really, really far, and once again deviated super far away from the 20-period EMA, then we have a reversal and start going back upwards. Usually that's what happens with these EMAs. When price action starts to deviate super far away from this 20-period EMA, eventually it starts to end up it starts to move in the opposite direction and have a little bit of a trend reversal there. So that's something you can look out for as well, okay? But overall here, these basic indicators, they really do work quite a bit, okay? The reason why they don't work for a lot of people, especially beginners, is because a lot of beginners, and trust me, I was there once too, so I know exactly what this is like, okay? A lot of beginners, they just look at the indicators and that's it. You cannot just be looking at the indicators and that's it. You have to look at price action. You have to look at candlestick patterns. You have to look at charting patterns. You have to look at support and resistance. You have to be looking at the price action itself in addition to the indicators, and kind of just use the indicators as more of a, how can I say this? Use the indicators as more of like a confirmation bias or a confidence type tool, rather than a tool that tells you yes or no, I need to get in this or I don't need to get in this, okay? So overall here, I hope this helped some of you guys out with your trading. But before I go ahead and wrap up this video, if you guys want to see more videos like this, you can find more of these in my technical analysis playlist here on my channel, like I was talking about before. And before you leave, guys, if you enjoyed this video, please make sure to go ahead and subscribe to the channel, hit the like button below the video, and leave me a comment below the video on your thoughts of what you thought of this video. And with that said, for those of you guys who stuck around and watched this entire thing, thank you guys very much for watching. I appreciate all of you, and I hope to see you all in my future videos.